can you talk to us a little bit about what's more important right now for the Federal Reserve? Inflation, which of course has been something they've talked a lot about, or the fact that at some point they may have to drop rates down again if the economy does soften, and they want some ammunition to do so. They are given a clean slate by the market to do it this year. Can you weigh these two sort of issues?
Sure. Well, you know, it always seems a little strange. Let's raise them now so we can lower them later in case things,
but that's
things
true.
get bad. There's been talk about that for a long time. And, you know, in a low inflation, low interest rate world, that so-called zero lower bound, which we actually saw Europe violating a bit. You can get a bit negative on that rate, you know, being a constraint on the market. But no, overwhelmingly, I think it's the inflation data, because even though the real economic data has not been very good in the last 3 weeks, the inflation data has been higher than both what the Fed and the market has expected. So they're going to be geared. I expect the dot plot to be stronger for end of year. I wouldn't be. We saw in December the median estimate was 3 increases. I wouldn't be surprised to see it 4 increases. However, again, we have 3 weeks of data, you know, until this very important meeting.
So, Professor Siegel, let's tie this to what they're saying as well, because the Fed officials were cautioning about financial market imbalances, and you quite rightly pointed out, in terms of the gyrations that we've seen in markets, 3 weeks has been a pretty long time as well. Can you put some of the movements that we've seen in stock markets just in 2018 so far into perspective as we look at history? Because you say actually overall the returns are pretty consistent on an annual basis.
Right. I mean, you know, I'm not, you know, last December on Bloomberg, I mean, I said we were going to get a correction this year. I didn't expect it to happen quite as fast. We did get that 10% drop. And yes, the Fed does look at those financial conditions. I think we got through this correction very well. I mean, yes, there was that brief, sudden downward movement that we had a few weeks ago, but trades were going on. The market certainly has recovered. I think it's selling at a much more reasonable PE ratio. We've shaken off a lot of those momentum players. Yeah. They do look at the financial markets because they do. That does summarize everything that's going on. But their biggest concern, I am certainly in March, is going to be how that inflation data plays out, and what kind of inflation data we will be getting in this next 3-week period.
Yeah, for investors too.